Good afternoon, everybody. It is 1 o'clock. Welcome back to the Opportunistic Trader. We are joined now by Joe Vaclavik of the Standard Grain. Joe is, joins us often, gives us his morning recap every morning, talking about the ag market. And Joe is going to be talking to us about some catalysts coming up this week in the ag market. How's it going, Joe?
Going good. How are you?
Yeah, it's good. It's good. It's been active in the markets recently. Good start to September, and ags have been actually really active the past few months, as you've been keeping us up to. But not a whole lot going on as much. I guess we're waiting for these ag reports coming out later this week.
Yes, we've got a USDA report tomorrow morning, so Wednesday morning at 11 o'clock Central Time. This is the monthly crop production and WASDE report from the USDA. And this time of year, it's September, we're getting close to corn and soybean harvest here in the U.S. So the big ticket items on this report tomorrow are going to be the production numbers for corn and soybeans, and more specifically the yield numbers. What is the yield per acre on a national basis going to be? And we're going to have big crops this year. We may very well have record crops in regard to yields. And that's why the corn and soybean markets have been kind of down and out. I'd call this a normal year in that we've got, trend or slightly above trend production. And when that's the case, those two markets, corn market and the soybean market, they tend to move lower from midsummer really through September and into the first part of October. And then it's usually in that time frame that you find some sort of harvest low. So this is shaping up really in all honesty to be just kind of a normal year. I know that we've got a lot of noise, outside noise that's contributed to some of this China trade dispute, is a big issue, of course, that's caught a lot of press. But really, in my mind, the bigger issue here maybe is that we've got big production, we've got big beginning stocks, we've got a ton of grain left over from last year. So we're just in a very well-supplied market, and that's pressured prices.
Yeah, well, that's what it looks like. So, what are your thoughts on any surprise for tomorrow? Like, what's volatility looking like for the report?
Well, we've actually been very slow ahead of the report. We've just traded some ranges in the corn market and in the soybean market. The wheat market's been a little bit different deal. The wheat's turned into more, and the soybeans too, have turned into more of a global market. The U.S. used to be a big supplier on the global market. We used to be, back in the 1970s, the United States was responsible for half of all wheat on the global export market. Now we're about 15%, if that. So we've really lost a lot of market share. We've really just become a residual supplier. But what we've seen here this year in the wheat is we've seen a number of overseas production issues. And because of that, we saw a rally in July and August, pretty sharp rally in the wheat market. As a matter of fact, we've given back a lot of those gains recently. What we'll need to see in the wheat, if we're going to sustain any sort of rally, we need to see better export demand. And for the moment, export demand for wheat out of the U.S. has been very, very poor, despite the crop issues around the world. And some of your major exporting countries, we still haven't been able to garner the export business that we need to sustain higher prices. So that's going to be your big ticket item with the wheat moving forward, is demand. I think the crop production issues on a global basis are mostly priced into the market. But if we can find some demand for this U.S. wheat, we might have ourselves a nice bull market on our hands, but we're not quite to that point yet.
Well, it's been interesting, and I'm sure you've seen it also, but the Commitment to Traders report has really shown a large spec position in wheat, despite, July and beginning of August, we had a nice rally from the low 500s up above, low $5 up above $6. And we've come all the way back for the most part, yet the specs still seem very long. Any thoughts on that?
Yeah, the large speculators or money managers, they've got a modestly long position in the Chicago wheat. They've got a really big long position historically in the Kansas City wheat market. The difference between those two, the Chicago market is the soft red winter wheat market. The Kansas City market is the hard red winter wheat market. The SRW crop, the Chicago crop, is grown, mostly in the Midwest, and the HRW crop is grown mainly in the plains, the southern plains in particular. So they're two different crops, but the prices track very similarly. But yeah, fund length there has been an issue, and I think we've probably seen some liquidation here as of late.
Right, right. And so, what about soybeans, which has been heavily offered for the past few months, just straight down on a combination, I guess, of a perfect crop and then the Trump or the U.S. tariff trade war possibilities with China? What's the report going to be telling us tomorrow, you think?
Well, the report, in all likelihood, is going to tell us that we're going to have a near record or record U.S. yield and record U.S. production. So that's part of the problem, and that might be the biggest part of the problem. The lack of Chinese demand because of these tariffs is certainly a problem. It's hurt not only the futures market, but also the cash market. But just to give you an idea as to where we stand on demand, it hasn't been hurt as much as maybe some people would lead you to believe. I mean, just to give you an idea, so last year, I think soybean exports were like 2.1 or 2.2 billion. We're going to be just under 2.1 billion this year, according to the most recent USDA estimates. And the prices have gotten so cheap to the point where that number could be understated even. So you could actually get yourself into a situation here where, despite the Chinese issues, despite the trade war, we could still end up with record U.S. soybean usage during the 18-19 marketing year. And that's something that, hasn't been reported, but is very possible given the numbers. There's two main components to soybean demand in the U.S. If you drive through the Midwest, you're going to see all these soybean fields. Where do all these beans go? They go to two different places for the most part. They either are exported out of the country, that's about half of them, and half of them are crushed. And when you crush a bean, you get meal, which is fed to livestock. Essentially, it's a protein, and you get soybean oil. So this export thing is a big deal, but the crush margins for processors here in the U.S. to turn those beans into meal and oil have been excellent for one of the most prolonged periods that we can ever remember in terms of the history of this market. So crush demand is going to be excellent. It's probably going to exceed expectations, and the exports, despite the absence of China, have really not been that bad.
Yeah, well, just looking at that chart, it's been a technical analysis kind of breakdown, and then we've held, and it really looks pretty ugly. It almost looks like it's looking for that next leg lower. But obviously tomorrow will be pretty interesting because the market is pretty short at this moment. And so if there were any sort of figures that could be supportive, it probably would lead to some, a move to the upside. But, really looks pretty ugly, that chart.
Seasonality is a big deal in the grain markets. The markets follow seasonal tendencies in a lot of situations, and it's because the same things happen every year. We plant a crop in the spring, we harvest a crop in the fall, and because of that, you've got a whole bunch of supply at one part of the year and lesser supply in different parts of the year. You've got times of the year where production and supply is more certain, and you've got other times of the year where there's a ton of uncertainty, like say early to midsummer, when we don't know how the weather patterns are going to play out. We're at a time of year now when we're fairly confident in the production situation, and we're really going to start to focus on demand. We're going to start to focus on South American production. Start to focus on next year's acreage. Conversations going to change here, certainly. But what I will say about this time of year is that this is generally a very poor time of year for pricing in terms of corn and soybeans. This is usually when we're carving out our lows for the calendar year in both of those markets. This time frame from, say, any time really from early September. The average date over 30 years is right around October 1st, but it could be within a week or two or a month of that date. So we're acting very normal from a seasonal standpoint here. There's a lot of noise, a lot of stuff with the trade war, a lot of things you're going to see in the news, but this stuff is all, from just a pure price action standpoint, very, very normal from a seasonal standpoint.
Yeah. What about in the past? We've seen some of these WASI reports create limit up days, sometimes multiple limit up days. Do you have any expectation that we could see one of these sort of things, or you think more recently we've seen subdued price action and it's probably good for a few percent, but not much more?
No, I don't expect any sort of moves like that. The way that you get that sort of move, I mean, anything's possible with these reports. They do have a tendency to surprise. We just haven't seen as much of that lately. We've been in a much more low volatility environment. The way that you get into a market where you get a limit up or a limit down move would probably be two ways at this point. I mean, you need China to come back and strike a deal with the U.S. If you get that, you probably get a limit up day in beans. You might even get one in corn. You might get one in wheat. That would be the first thing off the top of my head. I mean, the second thing would be that, maybe we get into harvest and these yields here in the U.S. are just disappointing for whatever reason. And I couldn't tell you why that would happen, but it could happen. It could be the opposite too, and the yields could be way better than we think. But that would be the way that you start to create some more volatility. Is you just change the narrative and you change the situation and you change what people have assumed or thought that they knew about the market, and it turns into something different. That's the way that you do it. But I'm not confident in either of those situations playing out at this point.
Yeah, and then from the what you're hearing and seeing, like anybody having gearing up for any interesting positions, any sort of like interesting structures, kind of heading into these figures, and also just for the rest of September, like anybody anything interesting on the price action side?
Well, so the farmer is going to be. Hey, I'm going to pause you for 1 second here, if that's all right.
Yeah, no worries. Joe mentioned that he might have to jump on a call. It sounds like somebody might be calling with an order. Just give everybody a market update while Joe is on that call over there. I got S&P. We made a low right around the open, 67 and a quarter. We're now trading roughly 24 points higher. We're trading 28.91. Nasdaq as well. Nasdaq was very weak. We're 100 points off the low. It was lower overnight and then really right around the open just exploded higher. Right now across the board, S&P, Nasdaq, Russell, all up small on the day. Nasdaq's up about 0.5%. VIX as well was trading up near 15, got as high as 1492. We're now near the low of the day at 1356. So once again, that's a pretty big move in the VIX.
I'm back. Sorry about that.
No worries. I was just kind of giving a broader market overview while you were off. I mentioned that you had to grab a call. Pretty interesting day, even just on the equity side. Overnight people were pretty pessimistic on a few different things, and S&P was off, and we're about 25 handles off the low. Nasdaq as well with a large bounce. So you were saying on volatility, interesting price action. Any sort of interesting structures or any kind of interesting price structures that people are putting on?
Not really. No. I mean, you're going to be in a situation here, which we've seen play out over the last few years. Farmers are going to harvest a whole bunch of grain this fall, and they're going to put it in storage and hope that something better happens. I mean, that's going to happen in a lot of areas of the country. I mean, granted, there were certainly farmers in a large portion of them that made forward sales, and they're going to be able to deliver grain at much better prices, prices that were offered earlier this year. There's going to be a lot of farmer-owned grain sitting around, certainly, which is nothing new relative to the last few years. So the funds and the farmer, essentially, in corn and soybeans at least, have kind of opposite positions. The farmer's long cash grain, the funds are short the futures, and I don't know if that changes anytime soon. The way you get that to change, again, was probably with the China deal or with a deal in which the U.S. production numbers for those crops are just not there. And I don't know, again, if either of those happens anytime soon. A large speculator hasn't been super active in the row crop markets, at least. I mean, they've been sitting with these modest short positions in the corn and soybean markets. They've been a little bit more active in the wheat market, I guess. But a lot of that can change, like I said, with the seasonals. If we put in a harvest low when we normally do, around that October 1st time frame, give or take, I mean, you might see the positioning change a little bit. I mean, you might see that sort of thing. You might see more speculators and large speculators even playing for some sort of upside move. But we need some sort of catalyst. We need some sort of catalyst to do it.
Yeah, absolutely. So it seems like the two major keys are data coming out and all eyes on China, basically, right?
All eyes on China, the data certainly, and there's really two types of data too. So, we're talking about production estimates from USDA tomorrow. What might even be more important is once we start to get into harvest in the heart of the Corn Belt, which is going to happen a little earlier this year than it usually does. Everything's kind of ahead of schedule. Once we start to hear those actual yield reports off the combine, the trade's going to really pay very close attention to those, and USDA will adjust accordingly in October, November, December, and then they do a final production number in January.
Okay. Well, that's interesting. We'll definitely keep a close eye on that. So tomorrow noon Eastern, we'll definitely keep an eye on the reports. Thanks a lot for the info, Joe.
No problem at all. We'll talk to you guys later.
All right, talk to you later, Joe.